Hi there, Shingra here again. Just another weekly update with some of the key themes, ideas, and themes that have been influencing our portfolio decisions and molding portfolio performance over the past week or so. Firstly, of course, would be the upcoming OPEC oil production output cut deadline. And of course, evidence, as we stated earlier in the week, seems to suggest that Kuwait and Saudi Arabia have already begun to tighten the tap on the commodity. Crude oil as a commodity in general has had a rough couple of days, but today seeing some leaps in the performance of crude oil, both for WTI and for Brent crude, as of course the large indices rolled over from the June contract to July contracts earlier in the week, and just some evidence of economies beginning to reopen and fuel consumption increasing, really supporting the price of Brent crude trading on as of Thursday. The Fed and the ECB, we expected some key rate decisions during this week, and already news coming from the ECB sort of indicating that the expectation is for contraction of 12% for the European economy, and that's something that we'll be monitoring closely going forward. In terms of GDP, Chinese GDP obviously for Q1 came in with a contraction of about 6.8%, and data coming out of the US has indicated a Q1 contraction of about 4.8%, and latest jobless claims data came in higher than the market expected, and that led to a bit of negative trading as of Thursday, with the jobless claims number coming in at 3.8 million new individuals, bringing the total tally of jobless claims due to this COVID associated weakness up to about 30 million. The next thing on the calendar has been, of course, earnings seasons continuing in earnest, and indications coming from the big tech companies early in the week, which is on Wednesday, seem to support a rally in US markets, with the big tech companies sort of holding firm in terms of earnings and leading to a bit more of an optimistic environment. In terms of markets, the FTSE on as towards of end of trading on Thursday was trading down about 2.8%, and as of Thursday close of trading, the Nikkei was down 2.14% and the Shanghai Composite was up 1.3%. Moving on to CBAM portfolio performance on a 1 month basis, all the CBAM portfolios except for CBAM 5 have outperformed their relative benchmarks, with CBAM 5 underperforming its benchmark by just under 15 basis points by returning 7.94% on a 1 month basis, and CBAM 1 outperforming its benchmark by returning 3.75% on a 1 month basis. Moving on to a year-to-date basis, all 5 of the CBAM portfolios have outperformed their relative benchmarks, and the returns have ranged from CBAM 1 returning minus 1.65% all the way to CBAM 5 returning minus 11.13%, and right in the middle you would see CBAM 3 returning minus 8.34%. And again, just here highlighting the higher levels of downside capture for equity heavy portfolios in a downwards market sort of cycle. Over the next couple of weeks, we expect to see more economies across Europe, Asia and America beginning to reopen as they lift the lockdown measures that have been in place for the past couple of months. And one thing that we'll need to monitor very closely is whether some of these governments have been prematurely lifting these lockdown measures and the rate of which the COVID pandemic continues to spread across these respective regions. In the US, preemptively, the Chamber of Commerce, which represents business owners in the United States, has appealed to courts for an immunity sort of arrangement, which would allow them to be immune from COVID lawsuits from employees coming back into work and subsequently being exposed to COVID pandemic, which really sort of highlights that risk that governments may be reopening economies prematurely. And of course, we'll be able to see some of these results in terms of how quickly the consumer is comfortable leaving their homes, given the way that we've had to change the way we live, work, and learn over the past couple of months.